Good afternoon, good morning, good evening, everyone. It is almost 8:30 Eastern Time on this third day of May 2021. Did I say it was the 5th? I see 5 and there's 5. And I'm used to seeing the American way of doing the date, and I have a lot of European clients who do it the other way, the day month year, which makes sense. And then, oh my gosh. And then the metric and imperial system. Oh my gosh, it's a headache. Okay. Let's take a look here. So I just got done doing the Ethereum video. I'm taking a look at Bitcoin here. This is more of like an update of a video slash articles I was doing last week. So Ethereum's had a really nice rise, and Ethereum's responsible for most of the generation in value over the entire market cap. Certainly for the altcoin markets. Bitcoin has kind of stagnated, and I've mentioned that this 886 range is a pretty stiff rejection zone. I wrote that in my article on Friday, that this could turn into a really nice corrective move that drops us all the way down to roughly the $3,700 value area. When we look at the daily oscillators, this is something that is a little bit of a warning for those who are wanting to be bullish here, because we dipped all the way down in the RSI to 30. We started to curl up again, but now we're at 55. Now, when something shifts to a bear market, the overbought and oversold levels in the RSI change. This all comes from Connie Brown's groundbreaking work, Technical Analysis for the Trading Professional, came out in 2008. It is the standard now that is taught on how to use the RSI. In addition, she updated how we by the Chartered Market Technicians Association. Fibonacci retracements we draw differently, and we look at the RSI differently. So people are still using the RSI and saying that 30 is oversold and 70 is overbought. That is originally what Wells Wilder created, but it's not how it's used anymore. Like any tool in any field, it will change. Okay? So when something shifts into a bear market, we have a change that we need to make, or just how we need to look at it. So for overbought, in a bear market, I had to pause my recording while I grabbed my book, so make sure I was giving you the right numbers. For bear market, the RSI will trade in a range between 20 and 30. So 20 and 30 are the oversold levels when something shifts to a bear market. The upper resistance zones, the overbought levels, shift to 55 and 65. We got all the way up to 55, and we've faced resistance. And it's looking like it's going to not trade higher. It's interesting that we halted right up against 55, because now what this looks like is a trip lower. I want to point out that we've talked about the shift seasonally from risk off to from risk on to risk off. So look at currencies that are going to change. The dollar probably gaining in value, the yen gaining in value. I mentioned this last week. Then look at silver and gold. Silver and gold had a really nice day. We had gold trade up 21, almost 22 points, and silver closed 3.73% higher. It's nearing the $27 mark. And oh my gosh, that is one hell of a sexy looking Ichimoku chart on the daily chart for silver. If this breaks out, silver's going to $39. This is a really pretty sweet setup. Wow. Okay, back to Bitcoin. Where are we at? Here we go. So the shift here, but we're in the cloud, so this is really messy. If you're looking to short, we're going to have to wait for Bitcoin to drop down below the cloud at 51. Probably see what happens at 51,750. Probably. And then the lagging span, when it gets down to that level 2, I mean, the lagging span needs to drop down below Senko span A. And then we'll see if there's any support that gets found around 47K. Then the lagging span's probably going to find some support up against the 45K area. But 45K, 44 right now is really kind of shared zone. But ultimately, if we're going to look at attractive level to buy back in or to take profit or cover a short, the 1618 level at 37,000 seems to be the likely level. Just following a normal Fibonacci extension and a corrective move, this is a very natural area for it to end up. And then from there, it's just another trudge higher and probably targeting that 122, 127 K area for the end of the year. So just watch out for this move coming up. Don't let Ethereum kind of lull you into thinking that the crypto market's on another bull run. I think the Ethereum move's mostly a little bit of a fake out. Could totally be wrong though. I'm just reading what's here on the chart. But I'd be looking out for a drop south. If Bitcoin can trade back to 65K, then this whole thing is moot. But no matter how you look at this, there's either a corrective wave done here, or we're going to get a fifth wave that's going to create like an ending diagonal. It's going to create a wedge here. So just watch out for that. Watch out for the short side of this. And when it does move, it's going to move south pretty hard. From all of us here at Exchange Rates UK TV, thank you for watching. Please don't forget to like and subscribe.